Welcome to this Next Year podcast. Next Year podcast series, Transfer Pricing in China.
Today you're listening to the first episode of our three-part series on transfer pricing in China. We will speak in this interview with our Chinese colleagues about who needs to prepare local and master files, which thresholds apply, which deadlines need to be regarded, and which penalties can occur for non-compliance. In our next episode, we will discuss the current trends and developments in Chinese transfer pricing.
Thank you, Levin. Before we begin, a quick word on Nexia. Nexia is a leading worldwide network of independent accounting and consulting firms. We provide a comprehensive portfolio of audit, accountancy, tax, advisory, and business services. Nexia works with its member firms, leveraging strengths across the network and enabling the delivery of global solutions by member firms to clients. My name is Henning Straeter, partner and head of transfer pricing at Nexia in Germany.
I'm Levin Flascha, senior associate also in the transfer pricing team in Germany.
Today, we are very happy to welcome Eva from CR Tax in China. Dear Eva, would you like to introduce yourself, please?
Good morning, Henning. I'm very glad to attend today's podcast with Henning. My name is Eva Tian, and I'm a tax partner based in Shanghai, China. My specialty is cross-border taxation, and I have international tax experience for more than 20 years.
Thank you very much, Eva. And we are very glad that you have find the time today to speak about international tax and transfer pricing topics in our series, transfer pricing, especially in China and with China. And a very, very important question we receive from our clients here in Europe, for example, but I think it is worldwide the same question. Who needs to file a transfer pricing documentation report in China?
Yeah, it's a very good question. Where is the taxpayer? Actually, based on our state administration of taxation's regulation, first type of enterprises, including those who have a loss for a long-term period of time, and also for enterprises who acquire profits periodically. For other than those in loss status enterprises, also there are some regulations, like if the enterprises have related party transactions for more than RMB 200 million a year. I mean, from the sales and the purchase perspective, they are required to submit a local file. RMB 200 million equals to 27 million USD. You may say, I would like to remind those enterprises about such criteria. And also for those enterprises with annual amount of other types of related party transactions, if such amount exceed RMB 40 million, they are also required to file local files. 40 million RMB equals to 5.5 million USD. And also for other transactions, like if the annual amount of financial assets transfer exceed RMB 100 million, or for the intangible assets ownership transfer exceed RMB 100 million, they are also required to file local files in China.
Yeah, these thresholds are very, very important to be regarded. For example, here in Germany, we have also thresholds which are important for the obligation to prepare a transfer pricing documentation report. A question here, these thresholds you mentioned are related to intercompany transactions or also included unrelated third parties, external amounts. What is your advice here?
Yeah, it includes all of the transactions with intercompany parties and unrelated parties. Yeah.
Okay, got it. Thank you very much. And what has happened with if the enterprises, if the multinational enterprise is engaged in a single business? What should be regarded from your perspective, please? For example, while for enterprises engaged in single businesses, such as proceeding distribution, for example, and et cetera, what is your suggestion from your perspective in this kind of cases?
Yeah, they need to look at the total amount of sales and purchase. If the annual amount of sales and purchase would exceed RMB 200 million, they are required to file local files in China.
Okay, got it. Thank you very much. And for example, for businesses like contract research and development for overseas related parties, et cetera, and you mentioned if they make losses, you said that the enterprises should be regarded that there are documentation obligations in China, exactly?
Yes.
Okay, great.
Could you also give us an outline of the thresholds of the master file?
Yes. Based on our circular number 42 issued in year 2007, some enterprises has to file the master file if any of the following conditions can be met. The first one is cross-border related transaction occurred in the year, and the enterprise to which the ultimate holding company that consolidate the company's financial statements belongs has already prepared the master file. The second one is the total annual amount of related party transaction would exceed RMB 1 billion, which equals to 107.36 million USD.
Got it. Thank you very much. And it is an obligation from your perspective that the master file is also provided to the Chinese tax authorities, inclusive the local file directly, or are there some differences? Because here in Germany, we have also thresholds, but in other countries, both files, the local file and the master files, must be provided aggregated in one big file to the local tax authorities. Is this the same situation in China?
Yes, it's the same situation in China, very similar to Germany.
Thank you very much.
So are there any exceptions, for example, if you have an advanced pricing agreement in place, that you don't need to file a local or master file?
Yeah, are you talking about APA?
Yes.
Yeah. We also aware of APA in China. Actually, if you plan to perform an APA submission with China Tax Bureau, you don't need to file local file anymore. However, the APA process, it very time consuming, because APA would require the subsidiaries in China and also the parent company in other countries to submit, to communicate with their tax bureau respectively. So further based on our regulation, it would take around 6 steps to finally get the APA to be approved by the tax bureau.
Okay,
it's very but somehow for some big global company, it is still worthy to try to do it in both countries.
Okay, but if you don't do it and still have to file the master file and local file, which are the related deadlines for submission?
Yeah, let me share the deadline, because we have our annual corporate income tax clearance filings before or by the end of May of the following year. Now we are in the peak season. We are rush out to file the annual tax return for last year, by this week. So after we submit a corporate income tax clearance filing, we will need to submit local files, and the due date is the end of June. That means after May, we would normally take 1 month to prepare and file the local files with the tax bureau. And also for master file, we should submit them within 30 days from the date requested by the tax bureau in China.
That is pretty similar to our requirements. We also have a 30-day deadline.
Yeah, exactly. Often our clients request it is possible to provide an OECD prepared headquarter file or an English version. What is your experiences with the Chinese tax authorities in this kind of headquartering or headquarter preparation OECD local files in China? Because in Germany, for example, the German tax authorities often reject OECD prepared local files. They said we have here directly stricter regulations. I would expect it would be the same situation in China. Is this correct?
In China, we have to submit our local file in Chinese, in written Chinese. So if the global prepared the transfer pricing file, we have to make a very good translation to avoid any misunderstanding.
That is very, very important, and we often discussed with headquarters abroad about how we can avoid potential risks in the countries, because the old thinking or understanding is often regarded that the headquarters said, okay, we have one OECD regulated file prepared, for example, locally, and that this local file can be applied everywhere. But this is the same situation here in Germany, that the German tax authorities often not accept such kind of local files. So we spoke about risks. So my last question would be, what penalties exist in China in conjunction with transfer pricing compliance?
We already talked about the deadline. So just in case an enterprise taxpayer does not prepare or submit the related forms, transfer pricing files to the tax bureau, a fine may be imposed. For normal situation, the fine will be less than RMB 2,000 one time. But for some cases in a very serious situation, the fine would be between RMB 2,000 to 10,000 one time. This is for local file. The enterprise would do the submission late. However, if an enterprise taxpayer fails to provide information to truly reflect its related party transaction, a fine of less than RMB 10,000 might be imposed. And if under serious circumstances, a fine of RMB 10,000 to RMB 50,000 will be imposed. In addition to those kind of fines, the in-charge tax authority also has a right to deem its taxable income according to law. And in addition, for enterprises which have been focused as those for implementing special tax adjustment, an additional interest and 5% on the additional tax payable may be imposed based on our regulation.
That is very good to know and to be regarded. One question from my side, because in some cases we have also personal liabilities in such kind of tax disregarding obligation. So is it the same in China, for example, that their tax manager could be liable for such kind of missing the deadlines or not providing the documentation, local file, master file obligation in China? Is it possible that there are personal liabilities in China?
No, not exactly. Normally, the fine, the penalty or interest will be imposed on the employer rather than any person. So there's no personal obligation to be imposed on someone of the company. It will, bring a lot of occupational risk to that person.
That's a very good news because I think it is very important that they will get in touch with you directly, Eva, if some more questions occurred in such topics. So if you agree, we would like to provide your contact data in this podcast at the end of this podcast. If you agree, of course, Eva?
Yeah, please. Thank you. Thank you for
You're
your
welcome. You're welcome.
And thank you very much, Eva, for giving us an insight on the transfer pricing regulation and compliance in China. And we hope to see you again soon on another podcast of next year transfer pricing.
In this November.
Yeah. Hope to see you in the International Tax Conference in November. And thank you very much, Eva and Levin, for your time. And I'm happy to see you again in our new podcast series, Transfer Pricing in China. Thank you very much. Have a nice day.
Bye-bye.
Bye-bye.
Bye-bye.